So if you've been watching the headlines, then you will know that there is quite a significant move in the corporate bond market here in India, pertaining particularly with how AMCs handle corporate bonds. And to understand this in a little bit more detail, I have with me A. Bala from Aditya Birla Mutual Fund. Thank you so much, Bala, for taking the time. You're also representing AMFI in this situation. But two aspects. One, of course, is the backstop facility for corporate bonds for mutual funds. Let's first talk about that. Could you explain to my viewers how this will work? It's live as of today.
Yeah, thanks, Alex. Definitely it's an initiative which is done by the industry together for the industry, working closely with SEBI. Under the guidance of SEBI, we reached out to Delhi to get this backstop facility sanctioned. So first and foremost, we are thankful to both the Finance Minister and SEBI Chairperson for recognizing the importance of providing the much needed liquidity during the time of crisis to the Indian mutual fund industry as a backstop facility. The way it works is the Indian mutual fund industry today manages close to about 18 lakh crores of fixed income assets. And within the fixed income assets, if you look at the profile of assets, it will vary from AAA securities to AA securities, go down to as well as investment grade securities. Whenever there is a liquidity crisis in the market, normally we actually go and knock the door of Reserve Bank of India, or we go and knock the door of the banks to provide much needed liquidity. And this facility of backstop would definitely give a sense of, yes, there is a backstop facility available. Therefore, no need to panic in the market and go and sell aggressive the market and disrupt the market. And given the fact that the limit has been now set, which can go up as is about 30,000 crores, with a contribution of close to about 3,300 crores coming in from the mutual fund industry players, both from the AMC balance sheet as well as from the funds, which are the fixed income funds, also will invest in the AIF that is being set up. And rest of the money will be drawn down from the Ministry of Finance budget, which they are provided through the vehicle in which I think the government will permit, and through this it will be availed. But historically we have seen what is most important for the bond market, especially during the stress times, is a comfort. Yes, there is a liquidity that will be available for one to manage the liquidity crisis. Therefore, this facility that has been given, I would assume it give a lot of comfort during the stress times, not to become desperate and distort the yield curve, and therefore have an impact on the whole market, which will have an impact on, if we go and sell, it will have an impact on banking industry, it will have an impact on insurance industry in terms of valuation going up and down. With this facility, definitely will give lots of much needed breather, which I think is a quite innovative initiative. In fact, I must mention this. This is the first time in the world is happening of this kind of providing much liquidity to the mutual fund industries with the joint initiative between SEBI and the Finance Ministry and the industry.
Okay, now to understand this further, about 33,000 crore is the corpus of this fund, or over 30,000 crore. Am I right in assuming that all of the AMCs that participate will be able to draw from it? Have all AMCs participated?
See, those who have been running a fixed income schemes, they will have to participate in each of the schemes. And second, each AMCs, depending on the size of the AMCs, have to contribute to the capital of investment. Basically, it's basically created for ourselves, which I just mentioned. Each AMC have to bring in a capital from the AMC balance sheet. And the schemes, which of course managing fixed income schemes, have to also invest in the AIF to up to a certain percentage of the schemes. All put together, the 3,300 crores corpus comes. And what Government of India would be giving is actually the, you can call it the leverage, that so to speak, by the end of the day it will be backed by the underlying securities.
Understood. Now, in the event of a crisis, and we all hope that it never comes to that, but in the event of a crisis, how will that money be disbursed? What is the process that will be followed?
So I think each of these the players would, of course, the CDMF, the whole AIF would have the list of securities would be eligible for them to buy. They will constantly be evaluated, and those securities can be bought by the CDMF to the extent of your participation in the contribution. See, every AMCs will have a contribution to the corporate development bond market development fund. In that, whatever the corpus you have created, to the extent of your corpus, you can avail the benefit.
Within that 3,300 crore, whatever you have contributed, you can...
Yeah, as a percentage of the contribution will determine the overall amount that will be given, including 30,000 crores.
Okay. So fantastic. This is providing that much needed backstop, as you were pointing out. The second aspect is the AMC repo. Could you explain how this would work and why it's significant?
See, AMC repo also is something, one of the important piece for the bond market development is the self-financing. Whenever you need actually for raising money, So right now what you do is actually keep your government of India securities to borrow under the repo with the Reserve Bank of India. Whereas the same thing you can do actually in the corporate bond market as well. The AMC Repo Clearing Corporation would largely facilitate the the liquidity, much needed liquidity under the repo market for those securities which are less than AAA securities. I think India still needs development of the bond market, not for the AAA market, below AAA market. I think we must enable as a country, provide greater liquidity and issuance of bonds coming from companies, right from BBB rated companies, investment grade companies, go up to AAA rated companies. This AIMS Repo Clearing Corporation enables 60 to 68% of the repo operations would be largely available by companies which are AA minus, AA and A plus and A minus kind of things, which essentially means it helps in two ways. One, it provides much of the liquidity for those kind of bonds for refinancing to meet temporary liquidity. Second, it helps in discovering prices. Therefore, the market efficiency in terms of their borrowing will also help from the overall, so to speak.